There is plenty to unpack in fertilizers right now. Supply looks solid on paper, but prices and global flows are telling a more complicated story. I'm Johanna Bota, and here to help us unpack it all is Josh Linville, VP of Fertilizer at StoneX. Welcome back, Josh. We have spent a lot of time on urea recently, but I wanted to broaden it out to the rest of the fertilizer complex. North America looks pretty well supplied overall. So is the real issue here availability across the board, or is it more about affordability?
Yeah, and this is something that continues to pop up on the internet. It continues to pop up in the news. Whenever a new topic becomes popular, becomes something everybody wants to talk about, you get these people coming out of the woodworks and starting to talk about it. And how do you build a brand? Well, when you watch the news, your viewership doesn't come from, happy stories. It comes from the devastation, from the accidents, things like that. And so that's what's really being pushed is, oh my gosh, there's shortages. Oh my gosh, there's not enough to go around. And I'm talking about just North America here. And I'm not going to sit here and say that everything is out of the woods. We've still got a few more weeks to go for peak demand for side dress. But I think we can kind of calm down some of the fear mongering that we're seeing out in the marketplace.
Okay.
We look at potash. Listen, potash season is largely done. Most of that potash imports that we have in the US market, for example, comes from Canada. And so we're sitting good there. That season's largely done. No problems.
Okay.
Phosphate, a lot of problems globally, right? But again, we produce a lot of what we need for North America. And everybody we've talked to across the nation, across Canada, nobody's really talked about outages. Yeah, it might be slow getting product in. Yeah, it might be expensive, but no outages. Most of the anhydrous that we need is produced here. Most of the UAN that's produced is that we need is produced here. Urea has been the one that we've been watching the closest because we need to import a little bit over 5 million ton. When we run our demand model, and we're using 95.3 million acres of corn, we're using about 84.7 million acres of soybeans, 43.8 million acres of wheat, and you can dissect those numbers all you like. I'm not going to sit there and say they're completely accurate. It's just what we used last time we ran the numbers.
Okay.
We need about 5.1 million ton. You go through what our production has been, which has been solid based on what we thought it was going to be. You look at the imports that we know from the Commerce Department through February. You look at what we think we know for vessels coming in for the months of March, April, May, and then June is kind of a toss month. It's more of a summer fill than it is a spring month. We're sitting right at 5.1.
Yeah.
Everything is sitting okay. We think that North America, the product is either here or on its way. Now, just because we sit there and say it's here, that doesn't mean it's going to be at the right place at the right time. The market still needs to move the product into the system. That means we're going to talk about a little bit of a different basis situation. A lot of just-in-time demand is going to find out what just-in-time logistics look like. But again, you made a great point. There is a big, big difference between affordability and availability. Availability is there. Affordability, nothing is affordable today, not with the prices where they are, but the product is around if we're willing to pay the price.
I'm really glad you made that clear, actually. I want to stay with urea and actually shift over to Australia, because there's been very little urea heading that way. What do you think that means?
Yeah, so one of the things that could have made this global situation worse because of the Strait of Hormuz is Australia. Their demand has been down substantially because of the lack of rains. The farmers went through a good phosphate run. Everything was okay. Well, all of a sudden, the rains haven't come. The conditions haven't improved. And a lot of farmers are scaling back and saying, you know what? I don't need to put on this urea. I don't need to do this investment because if I'm not going to get rain, I can't grow a crop. What's the point of putting the inputs on it? And so when you look at their imports, and again, we're tracking vessels here, so it's not an exact science, but based on what we see versus what their 3-year average are, they are way, way behind. And this is something that worries me. And so if anybody's listening from Australia on this, if you haven't already purchased and applied your urea, I'm not sitting there saying, run out and buy every single ton you can get your hands on. I'm absolutely not saying that. But I do want to point out, if the rains come, if the meteorologists start to put out long-range forecasts that start to become wet very soon, and hey, weird things have happened in the world, right? We have seen forecasts change before. If you start to see it, there's going to be a rush on getting the supplies that are there. That's quickly going to run out. All of a sudden, now the importers have got to figure it out. Where am I going to get free supply from? I got to get more tons coming here. Well, Asia is sitting pretty tight. China isn't exporting. And India just locked up 1 million tons for East Coast ports. They soaked up a lot of the tons that are out there. Okay, next place, Middle East. Strait of Hormuz is closed. That place is very tight. Now you got to start going to places like North Africa. Well, Egypt just put a $90 a ton export tariff on their exports.
Yeah.
That's going to make that situation. It's all to sit there and say the importers are having to go further away. That's more expense. That is more sale time. And so if we see this situation, we're going to go from a position where it is dead, rain in the forecast. Everybody in the world in Australia becomes a buyer, and there's not enough product to go around. So have those conversations sooner than later. Be on the front foot in case this thing does turn. I hope it happens, but I'm afraid of what that urea demand looks like after the fact.
Right. You're just saying be prepared, basically.
Yes.
So let's finish on ammonia. Tampa just settled at $825 for May. That's higher than April, but actually much lower than expected. What's behind that?
Yeah. So people might be sitting there saying $50 a ton move higher, 825, and that's too low. And it is. When you look at all the problems around the world with anhydrous, the price ought to be higher. You look at the lack of Russian exports. They're normally your biggest exporter, and they haven't been there since 21. European production is still low. Trinidad production issues. Strait of Hormuz is closing 3 of the major exporters. Strait of Hormuz is closing all the LNG exports. Anhydrous has got a lot of problems around the world. And there's a lot of signs pointing that this price should have been higher. But the Tampa price is interesting. We spend a lot of time talking about it every month, but it's really only agreement between 2 companies. It's Mosaic and Yara. It's this long-standing price negotiation every month. Yara feeds anhydrous to Mosaic, who uses it for phosphate production. Well, my guess is Yara probably sat there and said, this price ought to be higher. But if we go too high, too fast, Mosaic may not buy as much. Their production rates might start to fall because their production rate on phosphate is incredibly high. And as high as the price of phosphate is here in North America, it still isn't something that supports where the production cost is. So from Yara's point of view, they may have sat there and looked at the price and said, you know what? Yes, we should be getting more margin. But at the end of the day, we still want full demand. I'd rather sell a lower price and full tonnages than a higher price and less tonnages. So it still points the right direction, right? It's still pointing higher. It's still showing all the problems around the world. We just expected that price to be up a little bit more, but you might have seen politics, human emotion play a part in this one.
What's the old saying? Slow and steady wins the race. Maybe that's what they're thinking here. And actually, one more thing that just came to mind. Looking ahead, what's the one thing that the fertilizer market might be underestimating right now?
I think it might be underestimating how quiet things can get this summer. We have been we're now, 10 and a half weeks into the Strait of Hormuz being closed. And it has been an adrenaline junkie's dream. It's one of those things where we've just been going so hard, so long, so fast. You know, you're getting up early, you're staying up late, you check your phone first thing in the morning, the last thing before you go to bed. We've got to remember, we've got summer coming up here very, very soon. You know, North American market, we're getting ready to go on the side dress. We just finished planting family farm here over the weekend. We're getting ready to shift to that last demand period. We might have forgotten just how quiet the market can be. And when you look at it from a supply standpoint, buyers around the world are going to sit there and say, no, thanks. I don't want anything to do with it. Not that early, not that price. No, thank you. And the suppliers are going to sit there and give you all the reasons why you should buy it. And listen, both sides are going to be absolutely right. And that's why we're afraid of the stalemate this summer. This market could get so quiet. I don't know if the market's anticipating what it could be like. And I think that can make a lot of people nervous out there. We struggle as a market when things get slow. We really, really struggle. We don't know what to do. We're always nervous. We're scared. We're missing something. I think the market better get settled because this summer could be one of the slowest periods we've ever seen.
Josh, thank you as always for your insights, and thank you to our viewers for watching. We'll continue to monitor developments here at StoneX, so stay with us for more updates and analysis. And don't forget to like and subscribe to the channel.